Welcome to the deep dive. You've really outdone yourselves this time, giving us a whole stack of Kotak Mahindra Bank's quarterly results to dig into. Let's see if we can untangle this web of financials together.
Yeah, it's a bit of a head scratcher. We've got soaring profits, a sprinkle of regulatory action, and a bank claiming they're transforming for scale. Their words, not mine. Should be interesting to unpack.
Well, you know me, I do love a good mystery. So first impressions. It seems like Kotak Mahindra Bank is on a roll from what I see in this investor presentation.
Yeah, the initial numbers do look quite promising. Their profit after tax shot up by a healthy 13% compared to last year. We're talking a cool euro 5,044 crores. Not too shabby at all for a single quarter.
Certainly nothing to scoff at, and it's not just profit that's looking good. Customer assets grew by a solid 18%, plus they've got a 13.88% return on equity.
All strong indicators for sure. But it's super important to keep things in context. While 13.88% ROE isn't anything to sneeze at, it actually represents a dip from the previous year. And then there's that whole RBI supervisory action thing lurking in the background.
Ah, yes, that did catch my eye too. Not really the kind of attention any bank wants, is it? Reminds me of that time I got a strongly worded letter from the library for overdue books, Although I'd imagine this is a tad more serious.
Just a tad, yeah. We're talking about the Reserve Bank of India stepping in on their credit card business. Less of a slap on the wrist, more like a firm hand on the brake. We'll dive into all that a bit later, though.
Color me intrigued. So, we've got ourselves a real financial thriller on our hands then. A bank seemingly firing on all cylinders, but with a shadow hanging over them. To really get to the bottom of this, we need to take a scalpel to these financials.
Couldn't agree more. Let's kick things off with their revenue, the lifeblood of any business, really. Kotak Mahindra Bank saw a hefty 11% increase in net interest income, basically what they earned from lending. Tells us their core lending operations are in pretty good shape.
So loans are booming, but Kotak isn't content with just being your average bank, are they? With all their subsidiaries, it's almost like a financial buffet.
Haha, love the analogy. Kotak has fully embraced a financial conglomerate structure. They're not putting all their eggs in one basket, that's for sure. Asset management, insurance, securities brokerage, they're even into microfinance. Talk about range.
Diversifying their portfolio for sure.
Hmm.
But are all these subsidiaries contributing to Kotak's success story? Some of them seem to be real winners.
Oh, absolutely. Some are definitely pulling more weight than others. Kotak AMC, their asset management arm, is the real star of the show this quarter. Profits up by a mind-blowing 60% year over year.
60%. Now that's impressive. What's driving that kind of growth?
It's like a perfect storm of factors working in their favor. Increased investor participation in the market, a surge in systematic investment plans. Seems like people are putting their trust and their money in Kotak AMC. And we can't forget about Kotak Securities, their brokerage house. They're riding the wave too, reporting a 37% jump in profits.
Sounds like they've got the Midas touch right now. But let's not forget about operating expenses. Even with great revenue, costs can make or break a business. What are we seeing on that front?
That's the million-dollar question, isn't it? Revenue's up, but their operating expenses haven't exactly been shy either. They've definitely increased, which isn't inherently a bad thing. It all depends on what they're spending on, right?
True, true. So let's unpack that a bit. What's the why behind this spending spree? Frivolous or strategic?
From what I can see, it seems largely strategic. They're investing heavily in technology, especially in beefing up their digital banking infrastructure. In today's world, a seamless digital experience is non-negotiable, and Kotak seems to understand that.
Makes sense. People practically live on their phones these days. Banking needs to meet them where they are.
Exactly. Plus, it's likely they're expanding their workforce too, which means higher salary and benefit costs. Ambitious growth requires top-tier talent, and that doesn't come cheap.
Very true. They're playing a high-stakes game here, investing in future growth, but also facing higher costs in the process. So how does this all affect their gross profit and those all-important margins?
Well, that's where things get interesting. Their gross profit is definitely up, which tells us their core operations are still profitable, but their net interest margin, NIM, has actually shrunk a little bit.
A shrinking NIM, huh? That's definitely something to keep an eye on, like realizing your favorite coffee shop is skimping on the espresso. Not a good sign. Why the shrinkage, though? Is it tied to those rising operating expenses we were just talking about?
It's definitely a factor. Those investments in tech and talent do eat into the NIM to some extent. But we also can't forget about the incredibly competitive landscape of the Indian banking sector. Everyone and their cousin wants a bigger piece of the pie, which can put a real squeeze on margins.
So they're spending more and fighting tooth and nail for market share. Sounds like a tough balancing act. What does this mean for their bottom line, though, their net income?
Even with those pressures, Kotak's operating income is still looking quite healthy. Speaks to their efficient management, I'd say. Their net income, the big number everyone wants to know about, is still up by a respectable 5% year over year.
Okay, so not quite the windfall they saw last year, but still holding their own. What about their cash flow, though? That's the fuel that keeps the engine running, right?
Exactly. And luckily for Kotak, they seem to have a pretty full tank. Their strong deposit base gives them a consistent influx of cash, and they've been quite strategic with their borrowing to make sure they have access to funds when they need them.
That's reassuring, especially with that whole RBI situation looming over them.
Yeah.
But having cash on hand is one thing. What about debt? Are they racking up loans faster than they can, say, transforming for scale?
Debt is always something to watch carefully. Too much, and things can get dicey. That being said, there are no glaring red flags on Kotak's balance sheet right now. Their debt levels seem manageable for the time being, and their debt-to-equity ratio is well within a healthy range. They haven't exactly been reckless with their borrowing.
That's good to hear. It sounds like they're walking a tightrope, investing in growth while also trying to keep their financial house in order. Let's not forget about the elephant in the room, the RBI action. How do you think that's going to affect their grand One Kotak strategy?
Ah, yes, the RBI intervention. It's like a surprise plot twist thrown right into the middle of our financial thriller. Remember, their whole One Kotak strategy hinges on creating a seamless experience for customers by cross-selling their diverse offerings.
Right, like a one-stop shop for all your financial needs. But if the RBI is pumping the brakes on new credit card issuances, can they really pull that off?
That is the million-dollar question. The credit card restriction could definitely slow down their customer acquisition, especially in such a competitive market. They're going to have to get creative and lean even more heavily on their existing strength.
So less about luring in new customers with shiny credit card offers and more about deepening relationships with their current customer base.
Precisely. They need to leverage that diverse portfolio of theirs to become the go-to financial partner for their customers, offering everything from basic banking and loans to investment products and insurance. It's a bet on loyalty and a more holistic approach.
Bold move, considering the circumstances. But to really understand if they can pull it off, we need to look at their guidance and outlook for the future.
Are they still optimistic about their growth prospects? What's the official word? So are we talking cautious optimism or full steam ahead? What's the official word from Kotak?
I'd say it's a bit of a mixed bag, really. They definitely acknowledge that this RBI order throws a bit of a wrench in their plans. But they're still emphasizing their commitment to growth through this whole One Kotak approach. Seems like they're focusing on what they can control, like leveraging their existing customer base and expanding their offerings in other areas. Kind of like a video game, right? They've hit a tough level, but they're adapting their strategy to overcome the challenge. Love the analogy. Makes sense, though. Not giving up, just changing tactics. Are there any red flags popping up in the data, though? Any metrics that are giving us a reason for pause?
There is one ratio that's worth keeping a close eye on, their CESA ratio. That stands for Current Account Savings Account. It's a really key indicator of a bank's deposit quality and overall stability. Think of it as the foundation their financial house is built on.
Okay, got it. And how's their SASA ratio looking? Any cracks in the foundation?
It has dipped a bit this quarter, which isn't ideal. It could mean they're relying more on term deposits, which are more expensive for the bank than current and savings accounts. Not panic button time yet, but definitely something to monitor.
Interesting. So we've got impressive growth on one hand, but regulatory hurdles, fierce competition, and now this dip in their SASA ratio on the other. It's a lot to juggle.
Yeah.
So what's the final verdict? Can Kotak Mahindra Bank really pull off this whole transform for scale thing with everything going on?
That's the billion-rupee question, isn't it? They've certainly got a lot of the ingredients for success: strong profits, a diversified business model. But this RBI action and the shrinking NIM add a whole other layer of complexity, almost like a horse race. They've got a powerful horse, but a pretty challenging track ahead.
Well, this deep dive has been quite a ride. We've seen impressive figures, unexpected challenges, and a healthy dose of uncertainty. It's like a real-life financial thriller playing out right before our eyes.
And that's what makes it so fascinating. We've given you the key insights, the so what behind all the numbers. Now it's your turn to connect the dots and decide what it all means for Kotak Mahindra Bank's future.
Exactly. We've armed you with the knowledge. Now it's your turn to put on your analyst hat. Consider it a little parting gift from the deep dive. Until next time, Happy investing, everyone.